Hello, ladies and gentlemen. Thank you for standing by for ReneSola Power's fourth quarter and full year 2020 earnings conference call. Please note that we are recording today's conference call. I will now turn over the call to Mr. Ralph Fong, Director of the Blue Shirt Group. Please go ahead, Mr. Fong.
Thank you, Rachel, and hello, everyone. Thank you for joining us on today's call to discuss fourth quarter and full year 2020 results. We released our shareholder letter before the market opened today. It is available on our website. There is also a supplemental slide deck posted on the website that we will reference during our prepared remarks. On the call with me today are Mr. Yumin Liu, Chief Executive Officer, Mr. Keith Chen, Chief Financial Officer, and Mr. John Liu, CEO of North America. Before we continue, please turn to slide 2. Let me remind you that remarks made during this call include predictions, estimates, or other information that might be considered forward-looking. These forward-looking statements represent ReneSola Power's current judgment for the future. However, they're subject to risks and uncertainties that could cause actual results to differ materially. Those risks are described under risk factors and elsewhere in ReneSola Power's filings with the SEC. Please do not place undue reliance on these forward-looking statements, which reflect ReneSola's opinions only as of the date of this call. ReneSola Power is not obliged to update you on any revisions to these forward-looking statements. Also, please note that unless otherwise stated, all figures mentioned during the conference call are in U.S. dollars. And with that, let me now turn the call over to Mr. Yumin Liu.
Thank you, Ralph, and thank you everyone for joining the call. I'm very pleased to report a productive year for ReneSola Power. Despite unprecedented micro challenges, we built tremendous business momentum and made solid progress in our mission to become a leading and profitable global product developer. Let me recap some of the key highlights of 2020. First, our financial performance was solid. We were profitable with adjusted EBITDA of $17 million and GAAP net income of 7 cents per share, non-GAAP net income of 9 cents per share. As anticipated, revenue was down primarily due to the timing of the product sales. The closing of 2 sales in Europe were delayed into the first half of 2021. The Hungary sale was completed in March, and we are very confident that Spain sale will be completed. Second, our financial position is stronger than ever through debt reduction and equity issuance. We reduced our total debt by more than $7 million during the year, a positive development considering the COVID-related micro challenges. We further shore up our balance sheet by utilizing the strong stock market to raise capital. During the year, we raised a total of $45 million through several stock issuance. The capital was and will be used to expand our product pipeline, penetrate the solar plus storage market, for working capital, and for potential M&A opportunities. We believe these capital infusions will enable us to execute our long-term strategic growth plan as we further consolidate our transformation into an asset-light solar project developer. Third, we expanded our reach across Europe through several joint ventures and partnerships in Germany, the UK, and Spain. The combined strengths of the joint venture and partnerships will offer new opportunities to grow our global pipeline. I want to call out the partnership with EFO Investment Group. We created a 51-49 joint venture company that intends to develop up to 1 gigawatt of solar projects in Europe over the next several years. We have the 51% stake, while EFO injected capital for its 49%. Fourth, we acquired assets from Nova Development that includes solar plus storage projects. As we discussed on our last call, This transaction expanded our development pipeline by approximately 200 megawatts. We also added an experienced solar project development team. This deal enables us to deliver a more complete set of solution packages to our customers. It also gives us access to utility projects and development activities in multiple states. Those states include Pennsylvania, California, New York, Maine, Illinois, and Arizona. Fifth, building on the acquisition of the assets from NOAA, we signed a PPA with Valley Clean Energy, a California-based public electricity provider. The project will add 26 megawatt of solar and 26 megawatt hour of battery storage. This is an important milestone for us. It is our first long-term PPA for a solar plus storage facility. Six, we monetize a total of 86 megawatts of solar projects in 2020. We sold projects in UK, Poland, Romania, Hungary, China, Canada, and the US. This showed strong execution by our team. These sales optimize our solar assets, enabling us to generate cash flow, realize profits, and further strengthen our balance sheet. Finally, we utilize our IPP assets to generate cash flow. Our IPP assets generate 182 million kilowatt-hour electricity, producing $24 million of recurring high-margin revenue. These assets reduce carbon emissions by nearly 129,000 metric tons in 2020. In sum, the momentum in our business is accelerating. The expanded pipeline of business activity reflects greater demand for product development, and we remain optimistic about our multi-year growth prospects. Now let me spend a minute discussing why we are so optimistic about our growth prospects. The global solar power industry is large and growing. More corporations are committing to reduce their carbon footprint and intend to meet their sustainability objectives by using renewable energy sources. Our target markets are regions where solar power usage is growing rapidly, supported by demand for green energy and favorable government policies. Let me give you a few examples. First, Europe. The European Commission announced the so-called European Green Deal, which is a set of policy initiatives with the goal of making Europe carbon neutral by 2050. This includes a proposal to be more aggressive in the reduction target for greenhouse gas emissions by 2030. The European Union now wants to get GHG emissions down to 50% of 1990 levels. The 2030 target right now is 55%. Another example is the U.S. The Biden administration intends to make the U.S. a 100% clean energy economy with net zero emission by 2050. This includes a plan to decarbonize the U.S. power sector by 2035. Adopting renewable energy sources that can be deployed at scale is the only real way to meet this goal. Finally, China. The central government just initiated the policy to reduce the country's carbon dioxide emissions by at least 65% from 2005 levels by 2030, and to become carbon neutral by 2060. With our focus on Europe, the US, and China, we believe we are strategically positioned for growth. In Europe, we have major development activities across Spain, France, Germany, the UK, Poland, and Hungary. In the US, our late-stage projects are in Minnesota, Maine, Pennsylvania, Florida, and New York, Utah, and California. And we operate utility projects in North Carolina. In China, our key geographic focus will be in the Yangtze River Delta area, which not only has attractive electricity tariffs, but also is one of the major metropolitan areas designated to play a pivotal role in the country's future growth of the economy. We intend to expand our IPP strategy and complete 100 megawatt of projects during 2021. Let me now update you on our project pipeline. At the year end, our late stage pipeline was 1 gigawatt, up from 730 megawatts in third quarter 2020. We continue to direct resources to the market with the best profit potential. Our near-term objective is to add incremental project pipeline in our core markets to reach 2 gigawatts by the end of this year. We also plan to monetize approximately 300 megawatts this year. Let's review highlights from certain key geographies. First, let's turn our attention to the U.S., shown on slide 7. Our late-stage projects stand at around 350 megawatts, of which 122 megawatts are community solar in Maine, Pennsylvania, Minnesota, and New York. Additionally, we have projects under development with a mix of corporate, municipal, and utility off-takers in other states, such as Utah, Florida, Maine, and California. Meanwhile, we operate 24 megawatts of small-scale utility projects in North Carolina. In Poland, shown on slide 8, our key assets is a portfolio of project rights. We have a pipeline of 206 megawatts of ground-mounted projects under development and construction. Slide 9 refers to Hungary, where we also invest in small-scale DG projects. Our late-stage pipeline has several micro projects, each is a half a megawatt, bringing total micro projects capacity to about 49 megawatts in the country. Those projects are also under development. Slides 10 and 11 detail our pipeline in France and Spain. We have 100 megawatts in France and expanded our pipeline to 95 megawatts in Spain, all of which are ground-mounted and currently under development. We are getting traction in Germany, as shown on slide 12. We have a project pipeline of 50 megawatts, all of which are ground-mounted projects under development. In the UK, shown on slide 13, we have a project pipeline of 150 megawatts, all of which are ground-mounted under development. In addition to our development pipeline, we currently operate a portfolio of 173 megawatts of solar projects that generate high margin and recurring revenue. As you see on slide 15, our operating assets include 149 megawatts of commercial rooftops in China and 24 megawatts of utility solar in the U.S. In Q4, we sold 15.4 megawatts of operating assets in Romania and 4.3 megawatts solar rooftops in the UK. In conclusion, we entered 2021 with strong momentum, reflecting high demand in the markets we serve, the resiliency of our business model, and the excellent execution of our team. Let me now turn the call over to our CFO, Pete Chen, for comments on our financial performance. Pete, please.
Thank you, Yiming, and thanks again, everyone, for joining us on the call today. Our shareholder letter and the supplemental slide contain all the figures and the comparisons you need. I'm not going to repeat every number. Instead, I'm going to focus on the factors that influence results. As I speak, please keep in mind that we will discuss certain non-GAAP financial measures. We use non-GAAP measures because we believe we provide useful information about our operating performance that should be considered by investors, along with the GAAP measures. A non-GAAP to GAAP reconciliation is included in our shareholder letter. Let's begin with our Q4 financial highlights on slide 19. Revenue of $17 million was up sequentially and down year-over-year. Revenue was up from last quarter simply due to timing of the project sales. As you know, our revenue can vary significantly quarter to quarter because of timing. We judge our success over a long time period that smooths out the quarter to quarter variation. Revenue this quarter was mainly from sales of projects in Poland and Hungary, and also from power generation. I would like to emphasize, sales of operating assets in Romania and the UK were not considered revenue according to the GAAP accounting standards. However, the combined transaction value was over $30 million. Gross profit of $2.5 million was down both sequentially and year-over-year. Gross margin was 15% compared to 61% in Q3 and 27% in the same period last year. The decline was due to revenue mix. Moving down the P&L, we continue to demonstrate expense control, bringing non-GAAP operating expense down 39% year-over-year and up 3% sequentially. Note that operating expense on a GAAP basis were down 50% sequentially. This was driven by other operating income of $8 million from the profitable sales of operating assets in Romania and the UK. Offsetting that is the increase in SG&A expense associated with the write-off of some aged receivables. Non-GAAP operating income was $0.7 million, and GAAP operating income was $1 million. GAAP operating margin was 6%. Non-operating expenses were down both sequentially and year-over-year. We had a foreign exchange translation gain, which was caused by the depreciation of the US dollar. That led to exchange gains on the balance sheet. As this resulted in GAAP net income attributed to ReneSola Power of $2.5 million, earnings per share on GAAP basis was 5 cents. Let's turn our attention to full year 2020 results. Revenue was $74 million, down 38% year-over-year. Keeping in mind that the $30 million plus sales of operating assets in Romania and UK had no contribution to revenue. Project development revenue was approximately $50 million, driven by project sales in multiple countries, most importantly US, Poland, Hungary, and Canada. Electricity sales were $24 million, mostly from 108 million kilowatt hours of electricity generated in China and Romania. Gross profit of $17 million was down 50%. Gross margin was 23% versus 29% last year. We expect gross margin to vary due to change in revenue mix and project sale geographical mix. GAAP operating expenses for 2020 were $10 million, down from $35 million in 2019. The decrease reflects efforts to streamline our operations, where prudent cost control and other profit generated mainly from sales of Romania and UK. GAAP operating income was $7.3 million versus operating loss of $1 million last year. EBITDA was $15 million. Non-operating expenses were $4.5 million, which includes interest expense of $6 million and foreign exchange gain of $0.8 million. The foreign exchange gain was primarily due to the depreciation of the US dollar against the local currencies, resulting in an exchange gain on US dollar-denominated payables. GAAP net income attributed to shareholders in 2020 was $3.3 million, compared to a net loss of $9 million in 2019. GAAP net income per share was 7 cents. Now let's review the balance sheet shown on slide 21. At year-end of 2020, we had a cash and equivalent, including restricted cash, of more than $40 million. In Q4, we used 2 registered direct placements to raise capital that we will use for working capital and to grow our solar project pipeline. We raised $5 million in October and another $20 million in December. In 2020, we raised a total of $45 million from the public market. This deal strengthens our balance sheet, provides capital flexibility, and enhance our ability to execute our long-term strategic growth plan. We paid off our long-term borrowing in Q4. We had a short-term borrowing of about $32 million. Please note that nearly all our debt is project-based and non-recourse. Let's cover 2020 guidance as shown on slide 26. For the first quarter, we're guiding revenue in the range of 18 to 20 million, and overall gross margin in the range of 10 to 11%. For full year 2021, we expect total revenue in the range of 90 to 100 million, and gross margin over 25%. And we expect a profitable full year 2021 with significant profit growth compared to 2020. Our 2021 outlook has two key factors. First, the COVID-19 and global economy conditions remain highly uncertain. We continue to monitor how the health aspects of the pandemic are playing out, as well as the effect on the economy. We anticipate some slowdown in activity in some geographical regions in the first half of 2021. You can see the recent lockdowns in Germany, Italy, and France, for example. Prudence demands that we factor broad variability into our outlook. Secondly, we consider the normal fluctuation typical of the project development cycle. In summary, we have achieved consecutively 3-quarter profitability and a full-year profitability in 2020. ReneSola now focuses on 3 basic solar markets: Europe, US, and China. With very strong balance sheet, we are very excited and very optimistic about our long-term profitable goals. With that, we would now like to open the call for any questions that you may have for us. Operator, please go ahead.
Ladies and gentlemen, we will now begin the question and answer session. If you wish to ask a question, please press *1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press the pound or hash key. Once again, it's star and the number 1 on your telephone keypad. Your first question comes from the line of Philip Shen of Roth Capital Partners. Please ask your question.
Hey guys, thanks for taking my questions. First one is, I think you talked about 300 megawatts of project sales for this year. Can you talk about roughly how many megawatts per quarter? It seems like for Q1, there's a skew of lower projects in that quarter, and it makes sense given your commentary on what's happening with in Europe. But was wondering if you could talk also about the mix of the 300 megawatts between NTP type sale versus other types of sales. I'm guessing most of it's NTP. And sorry if I missed it, but did you share when you expect to sell the Hungary project? Thanks.
Okay, thank you, Phil. We sold a total 86 megawatts, including 3 projects or 3 portfolios of projects in China, Romania, and Hungary. China, Romania, and UK. Those are operating assets. As Ke mentioned, it's not counting to the revenue. But those 3 portfolios include Romania 15.4 and 4.3 from UK and 23 from China. And the last 2, Romania and UK, happened both in Q4, and the China happened in Q3. We also have the NTP and COD sales in various markets, in the US, in Hungary, in other places. In Q1, Q2, Q3, in almost every quarter, we have some small portfolio sales. Compared to our traditional COD sales or even operating asset sales, we now focus more on NTP sales. The big difference of the 2 sales are, number 1, the development cycle or cycle for the project in our hand is a lot shorter at NTP sale, as we don't do any installation work. The second is definitely we don't do any financing, procurement, installation, which minimize the risk associated. The third, the margin will be a lot higher on the NTP sale compared to COD sale. But another big difference is COD sale, the revenue normally is around 6 to 7 times more of an NTP sale, as we will not count the full installation capex into the revenue anymore. So as we do have a strong balance sheet, our strategy can be pretty flexible. If we see premium can be made throughout the installation, we will do more of COD sales. But now, as we see, in many markets, NTP sale is the more popular, or to us, is the preferred option. We'll do more NTP sales.
Okay. Thank you.
Another question. Another question. As also mentioned,
yep.
The 2 projects we're supposed to close in Q4, one in Hungary, one in Spain, all got delayed to this year, 2021. And the Hungary deal was closed 2 weeks ago, and we expect to close shortly the Spain projects.
Okay, so they should. Well, Spain could actually spill into Q2 then, whereas Hungary is in Q1.
In Q1.
And then
Hungary closed Q1. Yes, that's right. Spain will be in Q2.
Great. Okay. You mean of the 300 megawatts that you expect for this year, can you talk about how much per quarter? Do you expect it to be, Q4 loaded or maybe Q3 loaded?
Actually, the most of the sales will be in Q3 and Q4, and we'll have several small sales in Q1 and Q2.
Okay.
But
and then
mostly heavy loaded.
In terms of 2020. Okay, thank you.
Go ahead, sorry.
In terms of 2022, no problem. In terms of 2022, in the past you've talked about, what the sales could be then. I know you haven't provided official guidance, but would you expect a similar run rate of 300 megawatts for 22, or do you think there could be some acceleration?
We absolutely see our growth are accelerating. That by the end of last year, we talked about gigawatt portfolio. Please remember our development cycle in typical of around 2 to 3 years. Considering some minimum or with experienced team and track record, our failure rate can be pretty low. In average, we can absolutely monetize 300 plus megawatts a year. And putting that logic into our portfolio by the end of this year, 2021, when we have 2 gigawatts of portfolio, we talk about accelerating the monetization of the projects in a lot bigger number compared to the past.
Okay, good. And when you think about the incremental gigawatt that you plan on adding to your pipeline, what percentage of that do you think will have storage?
We plan to build storage is a hot and also high demanding sector across the board. We see not only the U.S. but also in UK, the Germany, Spain, and even in some traditional market we are active, like in Poland and Hungary. Our team is dedicated to develop our capabilities in-house and build up the whole solution package, including solar plus storage plus and also the independent storage facilities. We hope to build in the next couple of years 1 gigawatt hour of solar plus storage or storage facilities. That is the pipeline we hope we can build up, and we are continuing our market access, building those PPAs or facilities.
Okay, great. And with all the capital that you've raised, and congratulations on that, can you talk about your M&A outlook and kind of how you expect to deploy the capital?
Okay, we do have a very strong balance sheet as we raised $45 million last year in 2020. Also in January, we raised $290 million. That gives us a full strength to execute our long-term strategy. M&A is one of the core considerations, as we do not only want to expand our pipeline in different markets, but also we want to expand our platform, building our experienced team by acquiring experienced teams like we did on the NOVA development team, and also together with the pipeline, and also building our organic strategic growth, for example, on the storage sector. The use of the $300+ million capital, we plan to absolutely continue expanding our solar pipeline. As we say, we want to double our pipeline by the end of the year to 2 gigawatts. We also develop solar plus storage. We are building our 100 megawatt IPP assets by the end of this year in China. We are also hoping to do more meaningful organic acquisitions. And we are active looking at the market to find those good strategic targets.
Okay.
Phil, I just want to add. Phil, I want to add that we are very disciplined and prudent on all these M&A strategies. So.
Okay, I appreciate that, sir. One last question, I'll pass it on. As it relates to your expectations for OpEx and general and administrative expenses, G&A, it was relatively large in Q4. How do you expect your OpEx to trend in the coming quarters?
I think, Phil, normally will be quarterly will between 2 and 2.5 million this year.
Great. Okay. Thank you for that. And with that, I'll pass it on.
Your next question comes from the line of Sam Price. Please ask your question.
Hi, good morning. This is Sam Price on for Pavel Molchanov, and thanks for taking my question. So I guess my first one, of the 100 megawatts in IPP assets that you mentioned for 2021, I just wanted to clarify, is the entirety of that amount planned for China? And then was just wondering if you could provide some additional details on kind of the opportunities you see there and what led you to go that direction.
Okay, thank you. It's a very good question. China, if you pay attention to our development activities in the past 18 months, we haven't done any new development in the last 18 months in China because in the past, all the solar renewable energy assets were expecting the government big percentage of the government subsidies in the revenue stream. Okay, starting from this year or late last year, the grid parity has been totally reached in China, and we are now developing new projects, 0% relying on any subsidies from the government, and those projects are continuing our past practices, which is the commercial rooftop deals. Very high margin. We talk about the high double-digit margins on a level basis. So selectively, we want to use our capabilities and experienced team to build those assets. And in general, our IPP asset margin, we not only have recurring revenue, but also very high margin, over an average 80% and plus. Across the board in other places, like as I mentioned earlier, we have 24 megawatts small utility-scale projects in the U.S., and we also sold our IPP assets in Europe. We may selectively do some IPP, to own some IPP assets in the future, but we remain to define ourselves as a project developer, not a pure IPP.
Got it.
Did I answer your question?
That's very helpful.
Thank you.
Absolutely, that was great detail. Thank you. And then I guess quickly for my follow-up, we're just wondering if it would be possible to get an update on the Eiffel Group JV, maybe either around kind of project timing or when a more formal agreement might be finalized there.
Yes, the Eiffel JV is the important initiative we have started in about over 6 months ago. It's going smooth. We already set up the JV. We are planning to inject the first about 400 megawatts into the JV in the next few weeks or very shortly. Okay. As I mentioned also earlier, we plan to develop and monetize up to 1 gigawatt in this JV in the next several years. And all those deals are mainly European-based.
Got it. Perfect. Thank you very much. That's it for me.
Thank you.
Once again, if you wish to ask a question, you may press star and the number 1 on your telephone keypad. Your next question comes from the line of Amit Dayal from HCW. Please ask your question.
Thank you. Good morning, guys. With respect to the guidance, just talking about the gross margin guidance for the year, you're saying 10 to 11% for the first quarter and 25% for the year. So are we doing 30% plus margins in Q2, Q3, Q4? Could you just give us a sense of how this is expected to play out in terms of your margin performance?
Amit, the gross margin guidance we said is over 25%. Again, the first quarter, the guidance is a little bit low because, again, in the first quarter is mainly COD sale. Again, as we focus on NTP sale, in the second, third, and fourth quarter, you will see much higher gross margin.
So for the non-COD sales, like what should we kind of keep in mind as the range for gross margins for that business?
I'll give you some data for 2020. Our 2020 NTP sale, the gross margin is around 40%.
Okay. Now that's helpful. Thank you. With respect to the energy storage portion of the business, it looks like this is going to become an important part of the story. Is the energy storage piece of these deployments also going to be part of the monetization effort, or is there an opportunity to maybe pursue the PPA type model for this?
For energy storage at this time, it is we consider to monetize those assets.
Okay, understood. The two, we're going from 1 gigawatt to 2 gigawatt pipeline. Is most of this coming from Europe, the additional 1 gigawatt, or is it a mix U.S. and Europe?
You are absolutely right. Europe continues to be the heavy part of our new development. And in the 2 gigawatts, over 50% or even 60% will be from Europe. And we see tremendous, strong growth in many, many countries across the board in Europe. And we are active in 6 countries. We are attacking 2 more countries Those are all on the top 10 of the solar market in the whole Europe. And we believe we have our sole experienced team to expand our market access to those new territories.
Got it. Okay, those are pretty much most of my questions. My other questions have been already discussed. I'll take my questions off. Thank you.
Thank you.
Thank you.
Once again, if you wish to ask a question, please press star and the number 1 on your telephone keypad. Once again, if you wish to ask a question, it's star and the number 1 on your telephone keypad. Seeing no more questions in the queue, let me turn the call back to Mr. Liu to conclude the call.
Thank you, operator. To conclude, we are committed to grow profitability, managing our operations efficiently, and strengthening our financial position. We are energized by the opportunities in front of us. We are looking forward to updating you on our progress again in a few months. Thank you all again for your participation. This concludes our call today. You may all disconnect.